Trump Media just released its quarterly financials showing a net loss of around $327 million for the last quarter. That's for the last 3 months on about $700,000 in total revenue. Let me just repeat that again, about a $327 million net loss in this past quarter. And the revenue this Trump Media company generated that controls Truth Social, only about $700,000. Let's just go into the financials. A 10Q is a quarterly report. The Q is for the quarterly here, the Form 10Q. Quarterly report pursuant to Section 13 or 15D of the Securities and Exchange Act. So publicly traded companies have to post these quarterly reports. Trump Media delayed their reporting because they blamed their prior auditor, the B.F. Borgers company. Ben Borgers was the leader of that company. And recall that they were sued by the SEC for massive financial fraud and for running an audit mill that basically signed off on companies that should never be going public, to allow them to go public without even really reviewing the financials. That was the allegations. B.F. Borgers denied it, but ultimately entered into like a $14 million settlement and are permanently banned from ever appearing before the SEC. You'll recall that we raised the red flag from day one on B.F. Borgers and let you know that company didn't seem right. It was our opinion. We talked about how, wait a minute, why does their office look like a rest stop bathroom? And then the Financial Times did some digging, found out that the PCAOB, which regulates the public accountants, found a 100% deficiency rate. Remember, the Trump organization then defended B.F. Borgers and said all these leftists like the Financial Times and others they're going after, like Midas and Financial Times is leftist, are going at radical Financial Times are going after our auditor, and how dare you, before they even started their work. Then the Trump organization blamed the auditor for the reason that they had to delay their quarterly reports. But here they are right there. Like, let's just look at the balance sheet so you can see it for yourself. Revenue, you see that? $770,000. That's the entire revenue. And then you see the losses right there. Loss before income taxes, a $327 million loss, over $300 million in a net loss right there. As we go through, like, what are they losing money on? What are they spending money on? As you go through this 10Q, it talks about how TMTG, Trump Media, plans to roll out a streaming content service in 3 phases. Introduce Truth Social CDN for streaming live TV to the Truth Social app, release standalone Truth Social over-the-top streaming apps, release Truth Social streaming apps for home TV. Such initiatives and potential acquisitions are all still preliminary and subject to material changes and risks, some of which are beyond TMTG's control. Given these uncertainties, TMTG believes it is premature to predict when it will attain profitability and positive cash flows from its operations. In order to fund its operations prior to closing, private TMTG issued approximately 24 convertible promissory notes. Here you have private TMTG's former chairman. This is what it says. TMG's former chairman, Trump. The success of this company is in part based on the popularity of our brand and the reputation and popularity of Trump. The value of TMTG's brand may diminish if the popularity of Trump were to suffer. Adverse reactions to publicity relating to Trump or the loss of his services could adversely affect Trump Media's revenues, resulting of operations and its ability to maintain or generate a consumer base. Can we pause right there, though, just for a moment? Its popularity depends on Donald Trump. Well, the actual company itself, its revenues are based on the popularity of Donald Trump. Well, your revenues are only about $700,000 for the past quarter, and you lost over $300 million. So if that's what the reputation of Trump has given you, but I think that it's given you something else. I think the reason that you have a company whose stock is trading in a way that values this company at over $6 billion on 700,000 in revenue for quarter one and 300 million plus in losses for quarter one. I think it's the stock that's being pushed up. And I just wonder if the retail investors who are focused on the stock have any sense of the way companies are supposed to be valued, or if they're just looking at Donald Trump's posts about Trump Medias and Truth Social and saying all of these things and Donald Trump's memes, and they're thinking, hey, I should buy this like I should buy other meme stocks. And again, this is my opinion. I'm not giving stock advice here at all. I just think it's very, very dangerous. Here is more from the financials that just dropped. As of the period ending March 31st, 2024, all revenue from Trump Media has been derived from the advertising of products and services on the Truth Social platform. Advertising revenue is generated by displaying advertisements as posts attributable to Truth ads and users' Truth Social feeds. So I guess it's here. Let me show you what their big advertisers are. Like this one, and here's another. So all of that adds up in total revenue for the quarter is like less than what a McDonald's franchise, a single one, does in a quarter. Yet the stock is trading at, in my opinion, grossly inflated rates. As you go into this, you see Devin Nunes has to certify that he's reviewed these quarterly reports and they're true to the best of his knowledge. What's notable as well is that, remember how there was in prior disclosures, there was a ongoing concern statement that was made by the independent auditor if the Trump Media could be an ongoing concern. Here, it's now not coming from an auditor. It says that Trump Media management believes there is not substantial doubt regarding the company's ability to continue as a going concern as of March 31, 2024. And the substantial doubt as of December 31, 2023 has been mitigated. So the substantial doubt from December of 2023 has been mitigated now that the quarterly reports reflect $300 million in losses and $700,000 in revenue. By the way, here's the CNN report. Trump Media lost more than $300 million last quarter on very little revenue. Trump Media reported a loss of $327.6 million during the first 3 months of the year, compared with a loss of $210,000 a year earlier. In the press release, Trump Media said that at this early stage in its development, the company remains focused on long-term product development rather than quarterly revenue. You're a publicly traded company right now. I understand that you view yourself now, I guess, as a startup, but generally, when companies are taken public, they've at least reached some level of maturity where the market can react to a certain amount of revenue and a certain amount of profits, or EBITDA, earnings before interest, depreciation, taxes, and amortization, where you can, when you go public, you usually don't go, we don't really know what we're doing. And you may say, hey, Ben, we heard about all of these tech companies, though, that are valued at billions of dollars, but also lose billions of dollars. Well, with those companies, their revenue is not $700,000. I mean, when you take a look at, like, I'll take a random company like an Uber. When Uber was being valued in the billions of dollars. First of all, they didn't go public right away. It wasn't like, hey, I've got an idea. Let's call it Uber. Let's go public tomorrow with our idea, right? It was over a decade plus of growth before Uber went public. And then when Uber went public, if it was having losses, its revenue was still in the hundreds of millions and then in the billions, where investors could actually see a path to profitability down the line. And you can say, well, it's a high risk company. Why don't we have a valuation based on a multiple of revenue instead of, say, a multiple of some sort of net profit metric or EBITDA metric, earnings before interest, depreciation, taxation, and amortization, because it's this, this stock is high risk, high reward, but it's showing massive growth. And you can justify it like that. Well, if you want to take a multiple of Trump media revenue, which would be a ridiculous way to value, a wrong way to value this, but let's just assume, again, all my opinion, but assume you took a valuation. Let's just let me inflate it for a moment, just so we can do this exercise together. And let's give it a 10x valuation on revenue, which you would never do for a company in this sector. Maybe you would apply a 5 to 10 time valuation on EBITDA, but we'll apply a 10 times, we'll do this together. Let's apply a 10 times valuation on Trump Media's revenue. And let's, rather than $700,000 a quarter, let's round up. Let's say $1 million a quarter. Let's say $4 million in revenue for the year. Let's give it a 10x multiple on revenue. And then we get a $40 million valuation, with 200 million shares plus outstanding right now. And by the way, Donald Trump controls over 50% of it. But with 200 million shares outstanding, if you had a $40 million valuation with 200 million shares, what do you think the value of each individual share would be? Well, under that metric, again, this is purely my opinion, it would be under $1 per share. That's why these types of companies are frequently referred to as penny stocks. 40 million valuation, 200 million shares outstanding. What's one share worth? Exactly. And that's one of the issues here. Yet it trades, and yes, it went down on this news, but it's trading in a way that values this company at $6.6 billion. And it's very, very volatile. And as I said, one of the things that Trump and the insiders, I think, are trying desperately to do, using their buddies at Congress, trying to get all the help they can, is after a 6-month period, Trump's going to be able to start selling his shares, and then there'll be liquidity after a standard lockup period. So I think they're waiting for this lockup period to expire. They want to do as much as they can to keep the shares trading sufficiently high for the next 6 months. And then I think they'll start unloading them. Again, totally my opinion, not giving stock advice. And then I think retail investors will suffer seriously here. And I've been saying this for many years now. I've been saying exactly how it's going to go down. Again, this is my own opinion. But when you see a company with these types of financials, and you see a statement like that, I mean, I think that's really, really, really kind of problematic. Take a look at this stat right here as well. In April, this social media network experienced a 19% year-over-year drop in average daily users in Android to just 113,000. I mean, what are we talking about here anyway? Wanted to show you those financials so you can see it for yourself. Let me know what you think. And again, this is purely my opinion on these.